Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. There are still two key patterns here. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern, currently 739 3/4 to well up the top off the top of my daily chart. This was not a perfect pattern, but it had been the main driver higher in the early part of this year. Break lower in July has left the following incredible targets on the downside. The primary target X is in the 352 area, and the harder to reach secondary target is down, X1 is down in the 217 even area. These are obviously, well, pretty much way out there targets that you can put into the back of your diary on the back page and look at them maybe once a year. The second smaller pattern was in development until the end of September, and on the surface seems a more reasonable opportunity. It was created from the break lower of the larger pattern in June and July as an optimized falling wedge pattern, currently 555.5 to 581 even. The key features here have been the temporary halt to the decline at the February low at 599 3/4 back in August, the earlier breakdown through the 50% Fibonacci line of December 20 to April 22 move at 644 even, the forced break lower in mid-September below the lower trend line, and above all of these, the seeming break higher up and out of this falling wedge pattern at the start of October. This is continuing after a fashion, but is running into a lot of headwinds in its attempts higher. Now, before I start recapping my previously highlighted possible upside targets for this pattern, I'd like to reiterate something I've said these past 4 weeks here. There is a key problem with this pattern. It has been created in the wrong place. By that I mean it should have been formed after we'd had a prior ascending pattern, not as in this case after a great big gapping drop lower. This has previously led me to suspect that perhaps this pattern may morph further along into something else. Until recently I had not noted anything special, but now I'm minded to look at the whole late June to date actions of possible very big V-bottom type pattern, an extended V-bottom with a possible flattening hesitation area formed during October. This is possible, and it would make for an interesting pattern with potential up to the 690 area, though it is of course early as yet. Anyway, let me apprise you of the potential targets for break upwards from the falling wedge pattern. A primary target X would be in the 702.30 3/4 area, and a secondary harder to reach target X1 will be in the 757 even area. What we currently have in the way is the 50% Fibonacci line of December 2020 to April 2022 move at 643 3/4, which is a stubborn stain that doesn't wish to move. And coming in from above, the declining medium moving average, currently 649 1/4. This is a new resistance that hasn't been tested since June, so I'm curious about it, especially given how we've already pierced it today. Beyond that, we have little in the way until the mid-August high at 671 even. Winnipeg canola. Whilst the September 2021 low at 839.20 and the August 2021 low at 817 even both acted to halt the declines back in late June and early July, it was originally the 50% Fibonacci line of the October 2020 to April 2022 move at 863.80 that triggered the retro reverse engines to pull prices up all the way back in late June, which is kind of ironic as it is now, during October, being acted as support for an attempt higher. Going back to the summertime for a moment, it became evident since the start of the sideways to lower movement we've seen here since June that there was a shallow bear channel, currently 776.5 to 879.20, and it is this that has been driving the recent market. So it seems until that slightly bearish channel breaks or morphs into another pattern, it will continue to show the slightly bearish angle of attack of this market. This leads us to what has happened since mid-September to date. where we've had a nice rally from the bottom of the bear channel, reaching the upper bear channel line at the start of October. Since then, we've been confined between the upper bear channel line and the 50% Fibonacci line at 863.80. This situation cannot last, even though ranges could narrow into the start of December. I suspect an event will take place that will trigger a move before then. The most recent factor affecting the market has been the declining medium moving average, currently 868.20, which dropped down into the market and almost through it without any effect of what is going on. A somewhat surprising move and result. So what is there left that could influence the market? Well, I previously discussed the idea that perhaps, just perhaps, the mid-September to date action is in the form of a rather flat bullish halfway hesitation. I'm not altogether happy with this, but it may just fit. If it does, and is way early so far, then we could be looking at a move to up to the 960 even area. Mind you, this time it could quite as easily be a topping action, and we'll see the lower bear channel line revisited once again. Bursa Malaysia crude palm oil. Superficially, you might think the break higher over the short medium moving average, currently 38.64, was a key moment in the move higher in recent days. And you would be partially right, but not wholly. You see, over September and mid-October, the market has formed a small but effective reverse head and shoulders pattern. And it was the combination of the break higher over the neckline of this reverse head and shoulders pattern, currently 37.13, as well as the old neckline of September 2015 to November 2017 head and shoulders top, currently 38.51, and finally the break above the short medium moving average that caused the move up since mid-October. This move higher has thus given us potential targets on the upside of a primary target X in the 42.45 area and a secondary harder to reach target X1 in the 44.40 area. This week we have come very close to reaching target X, but not as yet managed it. Now, you might think that it was because of the two lesser Fibonacci lines overhead at 42.39 and 42.74 that this stopped the market from rising, and you might be partially right. But I will draw your attention to the rapidly declining medium moving average, currently 41.89, that has entered the frame and has done the majority of the heavy lifting in keeping this market where it is. Interestingly, this medium moving average has not seen the markets since early June and has not seen a move up over it since last year. What happens with the medium moving average is now crucial to the future of this market, and I suspect it may only have a week or so to make a choice. Either breach it and break it, or follow it lower. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.